Good afternoon, everyone. My name is Xiachong Wu. I'm the moderator for this panel. So for the next 30 minutes, we are going to talk about the future of on-chain assets. Since we have 5 distinguished panelists here and only 30 minutes, I'm going to keep my remarks brief, and so we can hear more from our panelists. So let's start by having each panelist introducing yourself and your companies. Shall we start from Spark, probably?
Hi, it's a bit late in the day, so hopefully everyone's still awake. Yeah. So my name is Spark. I'm the CEO of MetaBank. MetaBank was founded last year, October 2022, and we are specialized in doing the mining RWA, which we will tokenize the gold, rare earth elements, metals, etc. So we're a bit different from other RWA players here. So we partner with the government, partner with the authority to digitalize their natural resources directly from the government. So and try to market them and raise the fund for the government. And so far we are doing the first 2 projects, and we'll launch the product in the next 2 months. Thanks.
Hi, my name is Stan. I'm from the ventures team at QCP Capital. For us, QCP Capital founded in 2017 in Singapore. We're based in Singapore as well. We are a full suite digital asset trading firm. We provide fiat crypto rails for our clients, spot execution, even structured liquidations as well. But mainly we specialize in crypto options and derivatives. So TLDR, you can see us like an institutional broker-dealer and crypto derivatives market maker. That's our main business, which is the trading desk, where we structure and price option strategies for our clients, from vanilla puts and calls all the way to exotic options and structured products. For the ventures, we've been investing since 2018. Some of our seed early investments include exchanges like Deribit, layer ones like Avalanche and Algorand, data companies like Nansen and Skew, and we're also investors and advisors to many DeFi options protocols like Ribbon, which is now Avo, Datanuts, Gravity, and the like. Yeah, so that's us in a nutshell.
So, hey, good afternoon. My name is Jeremy. I'm the co-founder of Open Eden. We are an end-to-end tokenization platform that we can help bring real-world asset on-chain. So our flagship product is a tokenized US Treasury bonds product. So through our platform, investors are able to use their stablecoin to mint this T-bill token that's backed by treasuries, earning close to 5.5%. So you don't have to keep your stablecoin in the cold storage and earning nothing. At the same time, you can also hedge away any of these DPAT risk. Thank you.
Hi everyone, my name is Julian. I'm the co-founder and CEO of 2 platforms. We've been focusing on the real-world asset space for 5 years. InvestorX is a Singapore licensed tokenization services and software platform. So we have a CMS and an RMO, which is a broker-dealer and an exchange license here in Singapore. We help all kinds of investment groups tokenize assets here. And we also built IXSwap, which is the first automated market maker for real-world assets. So anyone who has a real-world asset or a security token, what we used to call them, can start a legal and compliant liquidity pool. Thank you.
Hello everyone, I'm Delane. I'm from Block Native. So Block Native, we're a blockchain infrastructure company. We've been around since 2018, and we run a pretty robust suite of tools. But I think for the purpose of this conversation today of the future of on-chain asset, I think a few things that we do would be more resonant. So first thing is that we were running a block builder as well as an MEV boost relay on Ethereum. What that is that it's really close to the settlement layer of all tokens that pass through Ethereum. And we'll talk more about that from an infrastructure perspective. The other thing that we run is that we run a public good tool, which is a Web3 onboard. So if you actually use a DeFi application or any dApp, if you click that connect a wallet button in this bar that pops up, it's with really nice user experience. It's actually our Web3 onboard. What it is that it's a multi-function, multi-chain wallet wrapper library that is has over 9,000 weekly downloads on NPM. So it's one of the most used, or most beloved platforms. And together with that, we also run a gas fee estimation tool that lots of people in the market use. So that's what we do.
Okay, thanks. So we know that on-chain finance offers a more verifiable, efficient, and accessible way for the financial system to operate. And we see many financial institutions trying to tokenize the real-world assets. So what are the advantages of doing so, and what problems are they really solving?
Probably I start first. Yeah, so I talked to my friend during the lunch today. So he told me now all the crypto projects, so the individuals don't have any opportunity to invest at the early stage because all the investors like QCP, all the big institutions will take the opportunity at the very low price at the beginning. So in my view, the RWA can bring all the valuable assets to the individual investors, to the global investors who can have the access at very early stage of the project. Not only the crypto project, also the real world assets. For example, the mining project. So if you can you can be the angel investor for some gold mine, the rare earth mine, or any other mine, or to some properties at the beginning, then you can gain a lot at the end. Instead of only the big institutions can invest today, so RWA can actually bring the valuable assets to the individual investors. So that's the biggest value I can see. Thanks.
Yeah, I think I'll speak about this from a trading point of view. You know, apart from like efficiency, you know, self-custody and transparency, I think a big benefit of RWAs is liquidity. Because when you look at, for example, your tokenized bonds or treasuries, you know, when the market closes, you know, you can't really trade those assets anymore. I probably have to wake up at 4 a.m. to trade these assets that are not in Singapore. And so I think, you know, for blockchain, assets are always tradable. You have an AMM, like where you can swap back and forth, very efficient, and arbitragers can come in and bring the asset to its true price. So I think a big value for RWAs, especially for things like bonds and treasuries, would be liquidity.
Yeah, I think I agree with both of you. Maybe I'll touch on the part about composability. So imagine today you own Apple stock or Tesla shares, right? You know, you put it in your Saxo account or your IBCare account, and that's it, right? You can either look at your portfolio and then look at it, okay, every day is going up or going down. But you can't use it to do anything. But you know, if you tokenize a securities, you know, let's talk about a liquid product, whether it's stocks or bonds. Once you bring it onto the blockchain, there can be a lot more composability or a lot more different use cases. You know, one example is, let's say you have a tokenized money market fund or treasuries. Because you are taking ownership of that token, it is sitting in your own, you know, Web3 wallet. You can then either use it to transfer to each other, or you can borrow against it, and there's a lot more things you can kind of do with it because of the way that the blockchain is being constructed. And by tokenizing it, you know, you're harnessing, you know, all the benefits that the blockchain technology can bring, compared to in the traditional finance world where you can't have that kind of composability. So I think that is part that I think is really interesting.
Yeah, building on that, I think, you know, tokenization versus, you know, paper shares has all the obvious benefits of digital versus analog. In this new format, you can take tokenized shares of companies, which we've done recently, and you can plug them into the automated market making model as one example. And what does that mean is that with a very small amount of real world asset tokens, shares in, you can start a liquidity pool. And that's what we built at IXSwap. So that's never been possible before. On top of that, if you take these illiquid assets, especially the private markets, you can then start to look at lending, borrowing, staking, all these kinds of things you can do with your public stocks. That's another dimension of kind of value. Also, you have new structures, right? So tokenized structures, whether it's real estate or venture capital, these are historically, you know, fixed life vehicles that often run into trouble. So you can work on these new technology-driven investment vehicles with tokenization that's better for both sides. The interesting example I like to give is about the development of the ETF structure, which was a new technology structure married to the marketplace, which grew from $6 million to $7 trillion or something. So we're now going to see all these new investment products coming for real estate and private equity and venture and everything else as well. And the last thing is new distribution channels. So Coinbase is one of our investors. We just integrated with Base and Coinbase Wallet. We've got 15,000 institutions that want to launch, issue, and trade real-world asset tokens. And what you see now is you see all the banks selling crypto, and what you will start to see, which is happening, you can't see it if you're not working on every day, all the crypto guys will work out a way, whether it's partnerships or acquisitions, to sell real-world asset tokens. So both the TradFi and the DeFi guys are coming to the space, and it was mentioned before, and Jeremy's got one of the products that is a driver of why did the crypto guys come to real-world asset tokens, because there was no yields in DeFi, so people started tokenizing treasury bills and they started buying them, and they went, oh, this is great, don't want to come out of fiat, I want my stable coin to the real-world asset token, and now they want more products. So there's multiple levels of value that come from tokenization versus, call it, paper shares.
Well, I think a lot has been said, but I'll offer a perspective from, so after all, what this is ushering in is really a whole new, whole new value flows and transaction flows that then occupies or changes the dynamics of block space. So at the core of blockchain, it's fundamentally about selling block space. When you have new types of value flows and how it's composed, how it enters, the settlement layer, that then changes everything, and new mechanisms will pop up to help to bridge the gaps, create more secure pathways, and I think that's what we'll start to see with this, especially with regards to real world assets, right? You're talking about bringing in the next group of people who care very much about compliance, care very much about regulation, and the Wild West of blockchain is going to change and be a little bit less wild. So yeah, that's my view.
Yeah, maybe I can add one more point as well, is market access. So if you think about someone that is in an emerging market, for example, in Argentina, in Brazil, in Turkey, or Indonesia, where their local currency is experiencing a depreciating value against the US dollar, and they want to be able to access a US dollar asset. Actually, it is very difficult because a lot of it has currency control, so it is not easily available for them to get access to US dollar asset or US bonds, for example. But when you tokenize, for example, US T-bills, they will then now have access because they have access to crypto, to digital asset, to stable coin, and through that, there will be a very seamless way for them to now get exposure and hedge away their local, either inflation or depreciating currency risk. So I think, tokenization in the blockchain, combining together, provide access, and I think that is really the ethos of, what crypto market is all about.
Okay, thanks. So next, let's talk about the challenges and the risks associated with on-chain assets. There are many questions we can ask right here. For example, we know that there are different types of tokenized securities in the market. So are there any particular differences that investors should pay attention to? We also see that large financial institutions are implementing tokenization using private blockchains. So are there any differences tokenizing using private versus public blockchains? I just trying to name some questions. So based on your experience or what you are doing, what are the challenges that on-chain assets are facing, and how we can probably cope with that in the future?
I'll jump in on the private-public blockchain one because I love this one. Every single digital asset that matters is on a public blockchain. Bitcoin, Ethereum, NFTs, DAOs, stablecoins, T-bill, STOs, etc. Automated market makers, all the innovation, all the engineers, and that's where the whole world of finance is being redesigned. We went full public chain, which no one else did, at least in Singapore, because everyone thought, oh, you got to be on a private chain, which only increases slight efficiencies for the group, but it's a completely closed system. So you used to see the banks only issuing assets on private chains, and that whole narrative's changed. I think CEO Franklin Templeton said 2 weeks ago, public chains will destroy private chains. And it's just, you don't need really blockchain if you're doing a private we're not going to say you don't need it. It doesn't provide huge changes, but it's really being done for closed ecosystems. So we've been absolute proponents of using public chains because it connects with the rest of the whole space, and I think that's something that that's important, that's changing as well.
Yeah. Sorry, go ahead. So just to chime in, and I think a not often talked enough narrative is that even within public blockchains, there are private transactions. And what's happening now, actually, within a public blockchain like Ethereum, is that you see an increase in private transactions. What are private transactions? They're essentially transactions that are sent for transaction originators, like marketplaces or big entities that have high transaction volume, direct to certain order flow auctions or direct to block filters. So, and as we also mentioned earlier, right, like what does this mean for when even more value flows are unlocked from real-world assets getting on-chain, is that there's a potential that those tokens or these real-world asset tokens would also follow that same pathway. So, this is an interesting development, and there are a lot of mechanisms and companies and projects that are working to, work against this private problem or opportunity. Yeah, just wanted to share that take since you mentioned that.
Yeah, I'll touch a bit on the risk side. So a lot of people, in our industry is jumping on the whole bandwagon of, tokenization. But I think, for investors, it is very important, when you assess a tokenized product, you have to look at the legal structuring that is behind it. There are a lot of products out there that they'll create say, SPV and then pretty much set up like a loan agreement. So even though the underlying asset can be a AAA rated asset, but because of the legal structuring, there's added counterparty risk that can become a CCC product. So that's not what we want. And that's why at Open Eden, the way that we structure our product is we use a very regulated structure, fund vehicle, assets managed by regulated fund managers in tier 1 jurisdiction. So in a way that, you want to bring in a AAA underlying as a AAA product and not added, additional counterparty risk that, investors shouldn't be, because then what is the point of tokenizing a certain asset when whatever is a tokenized form, changes the whole risk profile?
Yeah, I totally agree with Jeremy here. As an investor, I've seen many, projects that try to tokenize real estate, tokenize T-bills, but yet they don't have any legal infrastructure set up. And I think as an investor, setting up legal infrastructure is not easy, but it's a must in order to achieve, for RWA protocol to achieve scalability. So I think that's a very, very important factor. And in terms of private versus public chains, I think we're already seeing solutions where you have public blockchains, for example, like ZK Sync, they have hyperchains. You see Polygon has superchains. All these blockchains, public blockchains already have solutions in the form of private and customizable blockchains, which are interoperable across the main chain and this private chain, and across from private chain to private chain. So I personally don't think it's much of a hindrance. Interoperability-wise, solutions are already there.
Yeah, I totally agree with Stan. So the biggest challenge I can see is the legal or confirmed ownership of the assets if you own the token. That's why, so we are working with the government, the authority, to make sure the token owner really own the assets. So this is a problem you must resolve. And the government also require the KYC, require certain regulatory reports. So that's why whether we can still use the Ethereum as the public chain for RWA, or there will be another public chain which are better regulated for the RWA in the future. So this is debatable, but I totally agree. So the biggest challenge is the legal or the regulatory need to support the RWA. Thanks.
Yeah, and just one more kind of connecting it back to a real world situation, which it might not be the exact use case, but I think this, the fact that we are bringing all these real world assets online, it unlocks a lot of second order effects and externalities that we cannot maybe even imagine at this moment in time. Just like, for example, if your next door neighbor who owns that house, and that house is tokenized and is, being exchanged on the marketplace, somewhere, right? And then because it's a token and it's being exchanged as such, it's exposed to, slippage, right? And what does that then, mean for your house, which is, next to this house, and because of that change in value, right? So I think these are things that, are something that's new and has not been fully discussed. But I think that's one of the, to answer your question. Yeah.
So next question I have for you is that how do you think the on-chain assets will impact traditional financial market and investment strategies?
Yeah,
Sorry, I couldn't hear the last.
How would the on-chain assets impact traditional financial markets and investment strategies?
Yeah, this morning I was on the first floor, so there's a Singapore FinTech Festival Insight meeting today. So there are a lot of regulatory persons there, including the from EU, from Singapore, from Italy, etc. So they're all talking about tokenization. So there's one speech from IMF. So 90% of the speech is about tokenization. So I can say the tokenization is a must-happen thing in the future. So it's just how it will happen. So how the traditional finance can accommodate. So you can see all the big banks. So the top 10 banks are all in the FinTech Festival talk about tokenization. And not only JP Morgan, UBS, Citibank, all the Singapore banks. I see OCBC, I see DBS. Every single bank now have the digital assets department to do the tokenization. So how it will change the traditional finance. So this is, everyone is doing their own way. But this must happen in the future.
Yeah, I think what you're seeing now in the banking world is that implementation of tokenization for efficiencies. Most of the banks' tokenization projects are just bank products. Interestingly, JP Morgan has their own platform, tokenization platform called Onyx. They tokenize publicly traded assets because if they do that, then they become more usable. So they could then lend and borrow and use these assets in different ways, which gives them a lot more value. So you see the banks tokenizing publicly traded assets to make them more valuable. You see them using tokenization to reduce the administration costs and operating costs. And there's a lot of data out there now that shows they can do this. And so, but in the private markets, which is multiple times bigger than the public markets, and we've obviously had very little innovation in it, and it's all companies, startups, tokenizing startup shares and real estates and all kinds of stuff. So I think the real impact will be a whole new world of products that are distributed into the banks. Because the banks aren't going to change. They're going to keep the walled garden. They're going to keep their investors locked up, but they're going to want to sell them more things. The interesting thing about publicly traded assets, over the years, the margins and the fees available are shrinking to zero. And that's mainly due to technology and also being attacked by fintechs, but technology grade. So if you think about what a bank gets for trading a stock for a client these days, it's generally nothing, or maybe it's 1 or 2, or I don't know, 5 basis points if they're lucky. If you were to get a tokenized company and sell it to a bank, or the bank raised money, right? The company would pay 3, 4, 500%, up to 800%, 800 basis points for that capital. So economically, if a bank is selling publicly traded stocks for almost nothing, or they could sell tokenized companies in a digital format, in a similar format with some liquidity on licensed platforms and make 4, 5, 600% more money, it's economically going to go there anyway. So I think what the impact will be a whole new world of products coming to the banks, but I also think there'll be a lot more. The banks will have to compete with all the crypto guys. Because when the Coinbases come and these other groups come and they have hundreds of millions of users and they've got already the blockchain infrastructure and they start adding real world assets, then a lot of the banking clients will start to go buy them over there because they'll have the more innovative and the better products. But that's my take.
Yeah, I think there will be a negative impact to traditional finance investors. They will have bigger eye bags and losing more hair because we've converted that market from a 9 to 5, 5 days market to a 24/7 they'll be trading all day round. No, actually, that's just a joke. I think jokes aside, I think the impact would be greater accessibility for diversification. Because especially if you look at the illiquid market, right, the private markets, that is typically accessible to high net worth individuals through their private banking accounts. But now, through tokenization, then it gains accessibility to the mass market, and people can start to create their own portfolio that is beyond just equities and bonds. And like the previous panel talked about it, right? Even like electricity or power and whatever, or even like real estate, right? You can now potentially own a share of a prime residential area in Manhattan, whereas right now, if you don't have 5 million or 10 million, there's no way you're going to participate in that. So I think diversification is a true benefit, through tokenization, and yeah, that's my take.
Yeah, I think instead of thinking about how tokenization can help traditional markets, I would like to flip it over and say, how does tokenization help crypto markets? If you look at the amount of total value locked in real assets today, it's about 6 billion. That's about 60 times from the beginning of the year. And so I think through this, you get a lot more capital inflow into crypto markets. You get new money or new users that potentially can see the benefits of efficiency, transparency, self-custody. And so I think it can benefit the crypto markets as a whole too.
I think I'm not from the same world as you guys, but I like to think about it from a social impact perspective. What I mean is that when you start to tokenize, these assets that mean different things, like green energy, like a geography, right, or like a cause, right? So I think in the future, what might happen or what could potentially happen is that you get people that can then vote with capital, their beliefs and their value, so that it can change society. Because that is something that was never possible before, but could be made possible with this new future. So just a different take.
Thanks. I think our time is up. So let's give a round of applause to the panelists for their wonderful discussion.
Thank you.
Thank you.